Gold has always carried a mystique that transcends cultures and centuries. From ancient empires to modern investors, it has been more than just a shiny metal. It's been a symbol of wealth, power, and security. But in 2025, something unusual is happening. Around the world, millionaires are quietly shifting their money into gold again. Not into stocks, real estate, or cryptocurrency, but into the same timeless metal once hoarded by kings. Why now? What do they see coming that the rest of the world doesn't? Before we uncover that answer, look around. No matter where you live, America, Europe, Asia, or Africa, the meaning of gold changes. For Americans, it's a hedge against inflation. For Europeans, it's protection from a fragile banking system. In developing nations, it's often a lifeline, a store of value when currencies collapse. Before we continue with this transformative story, if you love powerful financial narratives, subscribe to the channel and turn on notifications so you never miss an episode. Now let's discover how it all began. At its core, the global financial system is built on a single fragile concept: confidence. Every savings account, stock exchange, and government bond relies on trust, the belief that money will hold its value, that debts will be repaid, that banks will not fall. But over time, that trust has begun to erode. Inflation has quietly eaten away at purchasing power. The cost of food, housing, and energy has climbed, while real wages stagnate. Governments, drowning in debt, keep printing money to stay afloat. Millionaires look at this system and realize one chilling truth: value that can be printed can also disappear. So they turn to something the system can't replicate: gold. But this movement isn't just about inflation. It's about fragility. After years of ultra-low interest rates, the entire economy became addicted to cheap debt. Corporations borrowed, consumers borrowed, even governments borrowed. When interest rates rose, that debt turned toxic, leading to bank failures, debt crises, and liquidity fears. Gold doesn't depend on credit, internet access, or political promises. It's value you can hold in your hand. There's also a psychological element. Gold buyers aren't expecting short-term profits. They expect turbulence. Throughout history, gold demand has surged before major shakes in global order, before wars, before currency resets, before trade realignments. And in the last few years, there's been a clear pattern repeating. Central banks, especially in China, Russia, and India, have been buying gold at record levels, reducing dependency on the US dollar. Their actions send a message even louder than words. They don't fully trust paper promises anymore, and millionaires are following their lead. Today, the people buying gold fall into three main camps. The first are defensive investors, those preserving their wealth rather than chasing gains. They see gold as a shield against inflation and financial decay. The second are strategic investors, those hedging against a changing geopolitical landscape. Global trade, once centered around the dollar, is slowly fragmenting. The rise of BRICS nations and new cross-border currencies hints that gold will play a crucial role in whatever monetary future emerges. And finally, there are opportunists, those who buy fear itself. They know that once panic reaches the mainstream, prices explode. Their strategy? Get in early before the crowd. But here's what most people miss. This rush toward gold isn't about the metal. It's about trust, or rather the lack of it. Gold has no CEO to fail, no government to default, no algorithm to manipulate. It's not someone's liability. It's proof of value. Throughout history, from Rome to Britain to modern America, every great empire has done the same thing: debased its currency to extend its reign. Each time, gold preserved the wealth of those who saw the storm coming. The system evolves, technology advances, but the rules of value never really change. The global monetary order built after World War II, with the dollar as the reserve currency, is cracking. The Bretton Woods system tied global money to the dollar and the dollar to gold. But when that link was cut in 1971, governments gained unlimited power to print money. Since then, global debt has ballooned to over $300 trillion. You can't fix debt with more debt. You can't print prosperity forever. When confidence finally breaks, money must reset. Historically, gold becomes the anchor again. That's why gold is quietly positioning itself as the foundation of a new multi-currency world. Meanwhile, the de-dollarization movement grows stronger. China and Russia now trade energy in yuan. India explores rupee settlements. BRICS nations discuss launching a shared currency backed by commodities, possibly even gold. Each small step chips away at the dollar's supremacy. The United States risks losing the privilege that has underpinned its global power for decades, borrowing cheaply and sanctioning rivals through the financial system. When that privilege fades, confidence in paper assets fades with it. There's another twist: digital control. Governments across the globe are working on central bank digital currencies, CBDCs, fully traceable digital money. On the surface, it sounds efficient: no cash, instant transactions. But to many wealthy individuals, it's the ultimate risk. Imagine a world where every purchase can be tracked, or worse, restricted with a keystroke, where financial freedom becomes programmable. That's why some investors call gold freedom metal. It exists outside the system. It's private, tangible, untouchable, the opposite of a digital ledger. In 2024, central banks bought more than 1,000 tons of gold, a modern record. Meanwhile, private vaults in Singapore, Dubai, and Switzerland are filling up. The world's richest families aren't buying paper-based ETFs. They're buying physical gold bars tucked safely away overseas. Because when crises hit, paper promises lose value, but gold endures. Skeptics argue that gold doesn't pay interest or compound growth, and they're right, but its purpose isn't to grow wealth, it's to protect it. Gold is the fireproof safe, not the engine of growth. When everything burns, it's what remains. History proves this again and again, from hyperinflation in 1920s Germany to recurring currency collapses in Argentina. Those who held paper lost almost everything. Those who held gold preserved their wealth across generations. Fast forward to today. Debt is exploding, inflation persists, political instability rises, and trust in global institutions fades. The intelligent and cautious act early, not because they're fearful, but because they recognize patterns. Gold doesn't just represent security, it represents autonomy. Meanwhile, mainstream voices dismiss it as outdated. The irony? Many of those same advisors personally hold gold. It's the oldest trick in finance. Tell the public to hold paper while the powerful accumulate what's real. And they're not stopping at gold. Silver, copper, and other commodities are also rising as people seek tangible value. The trend says it all. The more digital the world becomes, the more investors crave something physical, something that cannot vanish with a power outage or policy decree. Now imagine another global crisis. Markets plunging, currencies trembling, and confidence evaporating. Governments run out of tools, central banks revert to printing trillions, and inflation returns with a vengeance. When that happens, gold won't just rise, it will redefine value itself. By then, it won't be about profit. It'll be about preservation. And those who prepared early, the ones holding the unprintable asset, will become the new financial foundation of whatever system emerges next. Because in every great reset, wealth doesn't disappear. It simply moves, from those who believed the system would last forever to those who saw through the illusion. In the end, gold is more than metal. It's memory. It remembers every empire that fell, every currency that failed, and every illusion that collapsed under its own weight. It's not the asset of fear, but of foresight. When the foundation of trust erodes, gold rises, silently, persistently, reminding the world that real value never needs to be promised. It just is. This story reminds us how financial choices and the pursuit of knowledge can transform lives and families. What would you have done in the protagonist's place? Share your thoughts in the comments below. If you enjoyed this kind of deep financial narrative, make sure to subscribe and turn on notifications. Leave a like if you felt inspired and share it with someone who needs this message.